Alright everyone, let's get started. It is Friday, the end of the week, so we have a weekend coming. During the weekend, as you know, the markets could be easily manipulated because we are losing volume. We have much less trading volume, and with less trading volume, it's much easier for manipulation. But today we're actually seeing still Bitcoin pretty much at the same levels as yesterday. Not much of a change over the last 24 hours. Same goes for Ethereum, slightly bigger drop than Bitcoin, 1.64% since yesterday. The rest of the market is still kind of undecided. So basically, really Bitcoin again is the deciding force. Is Bitcoin going to drop to the 41,000 or 42,000 support, or is it going to climb back? Well, currently I feel that a drop is to be expected. Today I'm not going to do chart analysis. I'm mainly going to focus on the news because I haven't actually reported news in the last couple of days. In my previous video actually I did chart analysis, and you know that I'm expecting a further drop to the lower support around 41,000, 40,000 even is possible. It would really depend on how the market behaves during the weekend, because if the bears manage to take control again, currently they're not very strong. We're having every time Bitcoin drops a little bit, the buyers are getting hungry, they're stepping in, and they don't really allow it to drop below 43k. But 42 or 41,000 Bitcoin to me seems to be the most likely scenario. So this is about Bitcoin and the rest of the markets. Now let's go into the news, because I want to report on some of the top headlines. First one is the government and the Central Bank of Russia are preparing a bill to legalize Bitcoin and other cryptocurrencies in the country, not as a legal tender, not like in El Salvador, but still, they're not going to outlaw Bitcoin. This comes amidst rumors that Bitcoin mining was going to be outlawed in Russia, and it's clearly an attempt at creating a more adequate taxation and tracking of crypto assets in the country. The Russian economy is not doing great, especially with the new international sanctions that are being proposed against Russia in the wake of their latest military advance against Ukraine. All of a sudden, they love crypto once again. Well, this will be a bill mainly directed to the citizens though. More and more people are turning to crypto so that they can preserve their capital, and the announcement is that those who do not strictly comply with the cryptographic rules that will be imposed will be fined and sanctioned. The bill to legalize and regulate the circulation of Bitcoin and other digital currencies in the Russian Federation will be approved before February 18th, so we're talking really fast turnaround here. Clearly the government is in a hurry. Here are some of the details that were reported. The joint proposal of the government and the Central Bank of Russia establishes the recognition of Bitcoin and cryptocurrencies as currencies and not as digital financial assets. However, its trading will need to abide by the same rules that apply to fiat money and any other that may be approved. Only fully identified users will be able to make transactions with cryptocurrencies through the national banking system and authorized intermediary companies, probably government legalized peer-to-peer platforms and brokerages. According to this bill, all operations for amounts greater than 600,000 rubla, around $8,000, must be declared, the Russian news agency reported. Other transactions for similar amounts that do not meet the legal parameters will be considered a criminal offense. Additional sanctions, including fines, are also provided for those who accept cryptocurrencies as a payment instrument by unauthorized means. The proposed regulations will not affect Bitcoin mining or other issues related to digital financial assets. Many crypto exchanges allow users to buy, sell, or store cryptocurrencies without revealing their personal information or their movements. If the bill is approved, as it is almost certain that it will, the privacy of operations with digital currencies will not be allowed. Users will have to provide their identity and all other data required by the intermediary entity. By centralizing operations through banks and supervised digital platforms, the Russian government will have full access to the identity of users and the movements that they make through a system called Transparent Blockchain of the Federal Financial Monitoring Service. This is a U-turn for Russia. If you remember, just recently they were thinking of a ban on mining in the country. But it seems that the high energy usage, which brings in a lot of revenue for the electricity providers in Russia, is in fact seen as beneficial to their economy. So now that they will tax crypto transactions and have full surveillance on crypto users, they will achieve even more control and will make some extra revenue from it. It's a win-win for the power-hungry rulers of the country, of course, not for everyone. In other news, internet guru Tim O'Reilly is saying that crypto and NFTs are a bubble. Get ready for the crash, he says, as reported by the Crypto Gazette. This is a typical clickbait type of a headline that is giving airtime to a claim which is kind of broad and biased. Apparently, Tim O'Reilly doesn't think that Web3 is ready to take off just yet. He is known for publishing the world's first website and coining the term Web 2.0. Right now, he feels that Web3 has a promising future, but is still a long way from its fruition. That's fine, I agree with that assessment, as I don't think that we have built enough of an ecosystem to support the vast Web3 usage. And for those who aren't familiar with Web3 functionality, I will dedicate a separate episode to that, so make sure that you have the notifications enabled for this channel. I will get this out over the next few days. Now, what's interesting though is that he compares Web3, the decentralized internet based on blockchain technology, and even NFTs and all crypto in general to the dot-com bubble from the late 90s. Interestingly, he doesn't base his view on any technical analysis but purely on sentiment, and that's only one metric that we take into account. However, I argue that to be able to spot bubble-like signals, you have to look at the charts as well as look at the sentiment and even quantitative and qualitative analysis. You have to look at the full picture. In this regard, I would argue that while NFTs are certainly displaying bubble-like performance, both in technical and sentiment analysis, the rest of the crypto space is much more leveled. Not without its sudden FOMO pumps, but far from a bubble, and many projects have already proven to be long-term sustainable, productive, and innovative enough not to fall in the bubble category. Ethereum is a good example. There is so much built on Ethereum already, so many applications, platforms, etc. No ground for making a claim that crypto as a whole is a bubble, and if this is another attempt at saying that the prices of most crypto projects are about to drop, well, that's the nature of the crypto assets, volatility, both up and down. So, is there a crash coming? For some projects, yeah, for sure. But for all crypto, no. We are going through a market correction. You can call it a bear cycle or a pullback, however you see it. A crash though, not by definition. At the same time, we see a report that the overall market sentiment has improved as institutional investments into Bitcoin, Cardano and Solana grows. The digital asset manager CoinShares reveals that last week's crypto market recovery was accompanied by quite a significant institutional investment inflow for several large digital assets. Apparently, Bitcoin enjoyed last week's largest share of institutional investments with $71 million inflow last week, the largest since early December, while Ethereum suffered its 9th consecutive week of outflows, losing $8.5 million in institutional investments last week. Solana, Polkadot, Terra, Luna, and Cardano also inflows totaling 2.4 million, 2.2 million, 1.4 million, and $1.1 million respectively. This was the first week of significant institutional investors' inflows for Luna, the token of Terra, and this is a sign that Terra now is being taken seriously as a long-term investment. This is the first indication of that. If you're holding Luna, then you're in good company. Well, I say that not because I'm a fan of institutional investors so much, but because these are not short-term swing traders, meaning that when we see market corrections and dips like this one, these are not the people who rush into selling in fear. In this respect, it is beneficial to the rest of the investors, as it means that panic selling will not be happening on a large scale from these investors. But we can still see plenty of panic selling from retail investors, and the majority of Luna's holders right now are still retail investors. This could change though if we see more institutional appetite in Luna. And another thing that I want to point out to you here is that there is another Federal Reserve meeting, this time very unexpected. They were supposed to be meeting towards the end of March. Now they're calling this kind of urgent February 14th meeting to discuss yet again what they're going to do about inflation. This is one of the reasons, one of the main reasons why we saw this sell-off in Bitcoin over the last couple of days. As you see, we peaked and we hit a resistance, and then we were unable to break above this resistance despite having such a strong rally before that. So this is the reason many people are now expecting that the Federal Reserve will take an even more aggressive action to curb inflation, to lower the inflation. And lower inflation actually is not very good for investments, because many people are going into different assets, stocks, cryptocurrencies including, in order to hedge against inflation. So if we are seeing lower inflation, or the inflation rates actually going down, then this is seen in the market as a threat against some of these investments. So this is why we're actually seeing such a sell-off, and this is why we are going in the lower regions. I am accumulating all of these dips. In fact, I just stopped. I had a few orders that I cancelled because I am expecting, what is this? Oh, this is Shiba. So I was just purchasing Shiba here on BitYard, and I got Shiba at 30.78. Before that I was getting it at 31.42, 31.54, 31.11 even. I mean, right now we are at 31.98, so we are not really different from the prices that I am accumulating, but I actually stopped accumulating at these prices and I placed some orders for lower prices because I am expecting, and this is not just for Shiba, I'm expecting the whole market to actually drop a bit lower. In Shiba specifically, I'm expecting that we will come to retest this support level. So I have some buy orders at 28.14, 28.70, 27.70 something as well. I mean, I'm placing quite a few different orders. You can actually see them here. 27.73 I have, 28.33, 28.63, 29.43 in case we don't go any lower than that. I told you about laddering positions in the previous video, so you know why I'm doing this. Currently we are around 3200, 3180 right now as we speak, but I'm expecting that we can come down and retest these support levels, especially if this Federal Reserve meeting is talking about more aggressive stance to curb inflation. This will definitely drag Bitcoin and the rest of the market a bit lower. With Bitcoin, I'm expecting that we will go to 41k, maybe even 40k. I don't really expect to drop below 40, but this will be ideal accumulation zones, so have patience. Right now I'm waiting to see what's going to happen in just 3 days from now. February the 14th is this Federal Reserve meeting, and this will be followed by many of the investors. A lot of people are actually betting on this. This is why we are seeing currently the market being quite undecided. After this, we will know which way to go. Maybe for a moment we will drop and this will be ideal accumulation, but I have no doubt that after that we will start another bull run, and it will be quite a strong bull run. So I am preparing for that right now. Also yesterday, Shiba had some bullish news that I didn't report on. The team behind Shiba Inu is seeing how the metaverse space is growing and they don't really want to be held behind. Announced in a blog post, the Shiba Inu team will introduce their own doggy version on the metaverse, codenamed Shibverse, but this is just a fun name. The real name will be revealed soon. In a statement, they said, "We have seen the metaverse space grow at a rapid rate, with enormous interest from small and large companies alike. The metaverse is set to be one of the biggest areas within crypto for many to enjoy, while others will produce content and developers will set up shops within, using it as another great resource to offer crypto communities incentivization, content, and regular royalties." So people are already speculating, are we going to see partnership with Sandbox or Decentraland perhaps? Well, according to the post, the team is currently researching various ideas while deciding on design terms with some teams behind existing developers of metaverse platforms. The Shiba Inu team is already in negotiation with some partnership builders about the announced project. They said in a statement, "Some of the biggest metaverse platforms that opt for introducing virtual estate are Sandbox and Decentraland. We understand the potential, expandability and performing evolution that this type of metaverse option brings to the community." So they're basically not saying too much, kind of keeping people guessing and leaving the door open to speculation, which is great for them because this is why we are seeing Shiba perform so well over the last few days. I mean, today it is doing a bit of a pullback, but definitely Shiba was doing a much bigger recovery than many of the other crypto tokens. And speaking of NFTs, another piece of news here. You remember that Melania Trump recently was having a sale of NFTs. Her first NFT was based on Solana network, which is great for Solana, but unfortunately it didn't sell very well. It basically failed. It was supposed to be an auction, so it had a starting price and it was supposed to go way above this starting price. Well, in the end, it was sold for the starting price. It didn't manage to get any bidding or anything like that. Now it transpires that in fact she was the one who actually bought her own NFT. She didn't want to reveal that, but clearly it transpired that the wallet that purchased that NFT, which was supposed to be a genuine sale, that wallet was funded by Melania Trump. So this is how we know now that she basically paid for her own NFT only so that she can create that headline and she can say that her NFT actually sold, when in fact, in reality, nobody wanted that NFT. Nobody was interested in a hat. It was an NFT picture of a hat that she was wearing. Maybe it was coming with the hat itself. However, people in the crypto space and in the NFT space, collectors and stuff, they are not interested in Melania Trump. This is the result. And as we know, with the transactions on the blockchain, they are publicly verifiable. This is how people were able to find out that she was the person who funded the wallet that purchased her NFT. Well, too bad for Melania Trump. Yet another failure, unfortunately. Alright, well, this wraps up today's episode of Crypto Corner, everyone. Thanks for staying until the end. I hope this brings you value, and if it did, please share it with someone else who will benefit from watching this. Also, if you want more crypto content like this one, make sure you are subscribed to this channel and show your support by leaving a like and a comment below. This will help the algorithms pick up this video so that it can reach more people. Also, make sure that you check out the links in the description below, where I list all of my top crypto services, exchanges, wallets, my top charting tools for market analysis, and my 2 ebooks that will help you get a better understanding of everything in the blockchain space. I also send out the Crypto Corner newsletter, where I share with you market insights every 2 weeks, in the beginning and in the middle of each month. So grab the link from the description below and join my mailing list. Trade carefully and stay profitable.